Hey everyone, as you know, at the moment, myself, Brandon, and Tom are over in the United States going to the Berkshire Hathaway annual meeting and recording some content over there. But in the meantime, I've got some other scheduled content, and today's video is going to be a clip from an episode of the Young Investors podcast. This clip is from episode 168, and it includes us talking about Charlie Munger's thoughts on a couple of issues that he discussed at the Daily Journal meeting a couple of months ago, including things such as China, cryptocurrency, and also a really interesting thing about Charlie Munger's views on modern education and how it differs from the education that he had when he was growing up. As I mentioned, if you want to stay up to date with the actual live content that we've been posting while we're in the United States, then make sure you're subscribed to all three of our channels, this channel, the New Money channel, and Investing with Tom. And you can follow me over on Instagram, everything linked down in the description below if you want to see the day-to-day. But with that said, let's jump into this clip.
Well, let's get into some Daily Journal Charlie Munger action, because he spoke about it. I don't know where you want to begin. You've got quite a bit here, so maybe you take us through. Maybe we can
back and forth. I mean, it's just kind of a collection of things that stood out to me that maybe we've been talking about related to Charlie Munger or value investing over the last little while. So, for example, at the start, and because he's just answering questions, of course, the questions are going to kind of generally trend towards current events. So, for example, he was asked about his investments in China, and Munger says he's very comfortable having his investments in China. Some people were in their question saying, "I feel uncomfortable investing in China," and he's like, "Okay, each to their own. If you don't feel comfortable, then don't do it," which is, of course, very sound advice. But it's like, I think one of the quotes was, it's like, he feels like investing, how do I say it? His feeling on, say, investing in Russia is how a lot of people are viewing like investing in China at the moment. Just like they feel a little bit scared, but he personally is not concerned. His general overarching argument was that at the end of the day, the best outcome for all nations is to just get along with each other. So in terms of like CCP and American delisting and that sort of thing, it's just like the best outcome is that all nations get along with each other and business is allowed to flourish. So he thinks that will happen. And so that's kind of his backbone for saying, I am comfortable investing in China, and he sees this stuff as long-term investments. So it's like, even there might be bumps along the road, but he's staying strong and going long. He's at the end of the day, he just said at the end of the day, the main reason he's buying in China at the moment is quite simply he's finding better value in China. That's the number one thing. He's like, he was being asked about, Chinese government. So he's like, the way I see it is we've bought into Alibaba just because we're finding better value there at the moment. We feel like we're getting more bang for our bucks. So that's what we do. We're value investors. That's what we try and find. We've found it, so we're grabbing it.
Yeah. I mean, I generally agree with the idea that obviously we want nations to get along with each other, but I think it's fairly reasonable for one nation to still point out if another is doing something that's pretty morally terrible. I think that's a reasonable position to take, because I don't know, I don't see it as, obviously you want a country to look after your own people first. I think that needs to be a priority. But then I still just see people as people, no matter where you are around the world, and, whatever's going on, whether it's the Uyghurs in China, that stuff really bothers me. And it's interesting to hear, and look, I'm no expert obviously, but it's interesting to hear that clearly Buffett has a very, very different opinion to Munger on China. Buffett does not invest in China, and we don't really know, what his deep opinion on that is, whether it's from a moral perspective or whether he doesn't find investments there, or whether it's the risks of regulation or whatever it is. But interesting to see that they have kind of different opinions on that. So
so that was China. He got asked about cryptocurrency. You can imagine what he said about cryptocurrency. He's actually done a 180, and he said that he's sunk the majority of the free cash of the Daily Journal into Bitcoin, Ethereum, and Shiba Inu.
If you can't beat them, join them. So
Yeah, exactly right. No, he's definitely not changing his tune on cryptocurrency. His general opinion is he feels it shouldn't be encouraged as it gets implicated with crime a lot. He said he's proud of China for banning it, and he thinks the US should have done so. And now that they're trying to integrate it, he thinks is the wrong move. So we will see. But I mean, it was also pretty clear that he didn't quite understand the full kind of inner workings of the block. I'm not saying that I do of the blockchain, because I definitely don't. But like I said before earlier in the podcast, it's just like a couple of little things he said which kind of showed that he didn't quite understand the differences in the way that the system works. He's certainly just he's certainly just not going to buy it ever.
Yeah.
So I think people should just stop asking him.
Yeah, it is kind of funny, not that it's necessarily the exact same thing, but it is funny to watch interviews of people with their doubts about the internet back in the early 90s.
Yeah.
And
Yeah.
one of the big pushbacks, and early 2000s even as well, was that there was so much crime that was being enabled by the internet. Like all of a sudden you had, before there was all these checks on chat rooms and messages and that sort of thing online, which now there's a lot of regulation around that. Before, it was kind of this new way to connect where you didn't have to use and go through a telephone company that was regulated by the government, and people, committing crime had to be careful, how they were communicating through there. So it's interesting to hear that, and obviously there was a huge amount of people pirating movies and games, and it still exists obviously today, but to a significantly less degree than it did when the internet was just the Wild West. But it's interesting to hear that as an argument. I don't think that argument holds all that much water against cryptocurrency. I think that's going to be the case with any new technology or anything new that hasn't been fully regulated yet, where the laws haven't caught up to the tech. So I don't know if I care too much about that as an argument against cryptocurrency.
Fair enough. In terms of inflation, it was interesting. This is what you were talking about before, how he remembers so vividly the events that have happened a long time ago in his own personal history. He was talking about how he remembers the recession that followed the high inflation of the 1970s. And he said, he really hopes that we don't go back there. He described it as a very horrible recession. In hindsight, he says he still thinks it was the right move for Volcker to raise rates so steeply as he did, which did end up controlling the inflation, but also caused the recession. But he isn't sure the political environment would allow that kind of decisive action again, which would cause such a nasty recession. He just doesn't think that would work politically. He just doesn't think that would be possible. So thus he thinks that this time round it will play out differently, but he doesn't know how. But he did say, and I quote, this is kind of crazy, "You may wish you had a Volcker-style recession instead of what we're going to get. The troubles that come to us might be worse than what Volcker was dealing with and harder to fix." So I don't think he's particularly optimistic about the future of inflation and interest rates and whatnot.
Yeah, it sounds like he has a position much like Ray Dalio's, which is Ray Dalio thinks the exact same thing. He thinks that governments are much more likely to devalue the currency than just offload some of the debt and get that debt down and get it under control. They're much more likely to let inflation run than fix inflation and hurt the economy in the short term as a result of it. So it's interesting to see, because that really is the inflection point we're at. It's whether the Federal Reserve will think independently from what the government wants, because the government's always going to be whispering in the ear, whoever's in power of the Federal Reserve, to get them to do what they want, but whether they want to spend more or whatever it is, right? So whether the Fed will act independently and then what they will do. I don't know. Yeah, we really don't know what's going to happen. But yeah, maybe they will be scarred from the what happened in the 1970s. But at the same time, it's kind of a good example of what happens when you don't get inflation under control, and then how devastating it is eventually when you do what is necessary, which is raise interest rates. So I'm certainly of the opinion that I want the Fed to get on top of inflation before it gets out of control. And the last year and a half, they have just continued to kind of cross their fingers that things, transition into a low inflation environment. But yeah, I don't know. Maybe that happens, but they are banking on it. And if it doesn't, it's they're going to need to do some sharp interest rate increases, I would think. So
they won't be very popular.
No. Well, they're not going to be popular either way, I think.
No,
I mean, they
they're
let
not.
inflation run and everyone's wondering why their rent is going up so much and why groceries are so expensive. Yeah. And if they raise
something
interest
about
rates, everyone loses their job. You can't win. I mean,
That's true.
it's just the it's the unfortunate physics of money, the consequence. It's like the equal and opposite reaction to spending a bunch of money, which we had to do to save people out of the pandemic. It's just an unfortunate, there's not always a good end. We kind of saved a lot of pain in the pandemic, but I think a lot of that pain will probably still come in a different form. And that just is unfortunate,
Yeah. Reminds me of the Ray Dalio quote where it's something like, because we have debt, we have cycles. And it's like, you can't avoid it. I mean, if you give money to people at a certain period of time, you then have to take money away from people at a different point in time. So it's swings and roundabouts. It all has to balance out. It all has to work out eventually. But I like how you described it as the physics of money. You're not wrong.
I don't know who first said that, and it just clicked with me. But it is absolutely true.
Yeah.
I think, and I mean, it's true for physics as well. I mean, there's physics in the real world versus in theory. There's obviously more factors than the basic kind of 3-term calculation that you would do, when you were doing high school physics, right? High school physics, it's nice. It's a nice vacuum. It's like a force this way, a force that way. There's no air resistance. It's very nice. It's very clean, right? But in the real world, obviously, it's not as clean. There's more
million
factors. And the same thing is true for economics. There's people who will read university economics and just live by that, but that's just not how the world operates. I mean, generally speaking, it's a way to kind of track how things change over time, but there are way more factors than that, and it's not something you can reasonably predict. But yeah.
Is there anything else you took out of the meeting?
I mean, there was one very interesting one right at the end. I think it was the last question. He was asked about whether he had an investment that was a dog. I think she referred to it as, so like a really, a bad investment.
Oh, yeah.
And he spoke about Berkshire's investment in the World Book Encyclopedia, which Berkshire was apparently making $50 million a year on that business, selling those books. Obviously, before the internet and computers, that was an amazing resource. Who could have seen that? No one could have seen that coming, though, unfortunately. And he spoke about how Bill Gates included a free encyclopedia on Microsoft's computer software, and the business was just basically wiped out. And that he said they still made a couple million selling them to libraries and schools. But yeah, and it was just an interesting case study because he was, kind of saying that's the ruthlessness of capitalism. There will be an invention